Hello everyone, this is ACCA Amit Kumar and we'll discuss the introduction to Ind AS. That what is Ind AS, how it came into being in India, and what is the relationship with IFRS. So what makes me eligible to talk about the introduction of Ind AS, that if I share a brief about me, this is ACCA Amit Kumar and I've been training on IFRS and Ind AS since 2009. The reason for this opportunity was that I was studying IFRS in my curriculum in 2008 as part of ACCA qualification. And in 2008, India was signatory as part of G20 summit that will be moving to IFRS from 2011 onwards. Though it was postponed later, and the real or actual date of implementation in India turned out to be from 1st April 2015. So there are many questions which remain unanswered, like when someone is following IFRS or Ind AS, that what we need to learn. Whether if we learn Ind AS now in full form, can we consider ourselves global chartered accountants? And how different is it from IFRS? What we need to take care of? And how can it be called truly international in nature? So all these questions I wish to answer through this session on Introduction to Ind AS and IFRS, how it came into being. So it started in 1973. A group of around 10 countries decided to develop uniform accounting standards. Uniformity means that the accounting being done in Canada, UK, Australia, New Zealand should be same with India, Singapore, Hong Kong. And wherever the financial statements are being prepared, they should be comparable, they should be understandable by international investors as well, which resulted in global exchange of capital. The investors in foreign countries believed in the financial statements of the entities established in nations other than their own country. So it built confidence among investors, among users, among financial analysts, and it also helped in eliminating complexity. There were requirements of converting into different exchanges, and it was very cumbersome or complex task to convert financial statements for the purpose of consolidation. So this was removed through the introduction of IFRS. So I'll share about it, that what is IFRS. So IFRS is International Financial Reporting Standards. This word was coined in 2001. Though the journey of developing IFRS standards began in 1973. A committee was formed known as International Accounting Standards Committee, who were responsible for developing standards. So they used the term IAS, International Accounting Standard. Now there's a lot of confusion whether IAS is same as IFRS. Shall I learn IFRS? Shall I learn IAS? So IAS and IFRS are same. There is no difference. The only difference is the accounting standards which are issued before year 2000, from the period 1973 to year 2000, they are known as IAS, International Accounting Standard. And by the time this committee developed these standards, there was a requirement for a standard which could help in actually implementing the international accounting standards. So there was a need for a facility standard which could help in implementation of IFRS. So a new body was formed known as ISB, International Accounting Standards Board, and International Accounting Standards Committee became International Accounting Standards Committee Foundation. Today it is known as IFRS Foundation. So International Accounting Standards Board, they coined a new term known as IFRS. So any standard they issued after year 2000, they termed it as IFRS. So the first standard at hand was first time adoption of IFRS, that how to implement this. So there is no difference between IAS and IFRS. The only difference is the accounting standards which were issued before year 2000, they are still with the prefix IAS. In a layman's language, we can say that the work done from 1973 to 2000 cannot go in vain. We cannot simply delete it. So we carried it forward. And also to maintain consistency with the learners or followers of international accounting standards, academicians, corporate professionals. If we delete it outrightly, then it creates a lot of confusion. So even today, if a standard is withdrawn or it is merged, we do not give a new name to that same number. Suppose IS1 was the standard for presentation of financial statements, IS2 is the standard for inventories. If anyone is following IFRS or looking at the Ind AS list as well, you may feel that why IS3 is missing, and you do not see a corresponding standard in India as well. There is no Ind AS 3 in India. There is no Ind AS 4, Ind AS 5, Ind AS 6. What is the reason behind it? The reason behind it is that to maintain consistency and comparability, the International Accounting Standards Board do not give the same number to a new issued standard, or if they withdraw any standard, they do not give the same number to it. Is the reason the list goes like this: IS1, IS2, 3, 4, 5, 6 are either withdrawn or are merged with other accounting standards. So we see the list beginning from IS7, IS8, IS9 is also missing. So the requirement was to bring in harmony. ISB was working closely with national accountancy bodies globally to bring in harmony with IFRS. So the accounting standards which were issued before 2000, they are known as IAS. The accounting standards which are being issued after year 2000, they are known as IFRS. There is no difference between IAS and IFRS. It's simply a matter of time. The ones which are being introduced after 2000, we are coining them or terming them as IFRS, International Financial Reporting Standards. They are equally relevant, equally applicable. When we say we are applying IFRS, it also includes ISAs in it. There is no difference. So there was a choice given: adoption or convergence. Adoption is being done by the countries who are not having their own accountancy bodies or who are willing to move to IFRS word by word. They opted for adoption. The countries who are having their own national accountancy bodies, and also to maintain their significance so that they can highlight local issues in their respective countries, the option of convergence was given, wherein we bring in harmony, the accounting standards in line with IFRS, but we give the same name, and we were given the option of giving a different prefix. Like in India, IS1 is known as Ind AS 1, presentation of financial statements. The name is same, the accounting standard is same globally. IS2, if it is inventories, in India it is Ind AS 2 inventories. If IS3 is missing, Ind AS 3 is also missing. It doesn't exist. In the same series, the series moved up to till IS 40 investment property, IS 41 agriculture. And the next standard issued was IFRS 1, first time adoption of IFRS. So what do we name in India? So we thought and we decided that we'll be naming it Ind AS 101. Any corresponding standard which is prefixed IFRS globally, IFRS 1 will be named as Ind AS 101, IFRS 2 will be named as Ind AS 102 in India. Now recently, if you noticed, IFRS 15 revenue from contracts with customers was introduced. So in India, we termed it as Ind AS 115. Any new standard which will be issued globally will be given the prefix in the series beginning from 100. So IFRS 16 is known as Ind AS 116. IFRS 17 is going to get implemented globally from 1st January 2023. So whenever we publish it, we'll be publishing it with the name Ind AS 117 insurance contracts. That's where it brings uniformity, and whosoever is learning Ind AS or IFRS today can consider themselves as global chartered accountants, because you're capable of working anywhere globally, because what you're learning or what you're reading today, the accounting you're following today is truly global, truly international in nature. So IFRS stands for International Financial Reporting Standards. It's a set of international accounting standards stating how particular type of transactions and other events should be reported in financial statements. And all the countries, all the national accountancy bodies should follow the same principles. There may be differences. So mainly the differences are in the areas wherever there was a choice given by IFRS. Choice given by IFRS, like there's a standard known as IS 40 investment property, which gave a choice of cost model or fair value model. In India, we did not opt for the choice fair value model. We simply directed that we want only cost model for IS 40 investment property. In the presentation of income statement, there was a choice that we can present the expenses either by function of expense or either by nature of expense. But if someone is using function of expense, they need to disclose the nature of expense. So you can make out what we did in India. When we were presenting it in function of expense, and if we are required to present the nature of expense in the notes to accounts, what makes sense, what makes our life easy. So we decided that we'll be only going with one option, that is nature of expense will not be allowing function of expense method in India. Another choice was that we could present income statement in two parts, profit or loss for the year separately and other comprehensive income separately. So there was a choice given at global level that you could present it in a single statement or you could present both these in two statements. So we opted for a single statement. So majority of the areas where differences exist are the areas where there is a choice in IFRS, and there are few carve-outs wherein we differed. Few carve-outs wherein we differed, like the bargain purchase goodwill is recognized directly in P&L as part of IFRS, but in India we show it as part of capital reserve. We differed in case of breach of a covenant or a long-term loan which is not rolled over or financed at the end of the reporting date. IFRS wanted it to be recognized as current liability. We differed and we said that if it is refinanced or rolled over even after the reporting date, we would like to continue showing it as non-current liability. So there are some areas where we differed which are known as carve-outs in India. So these are standards and interpretations issued by ISB. ISB is the National Accounting Standards Board. So who actually started it? Earlier in my discussions, I used to talk that there were a group of 9 countries who decided it. Australia, Canada, France, Germany, Japan, Mexico, Netherlands, UK, Ireland, USA. Earlier, Ireland was not mentioned separately. Now, since it is separate now, so we have included 10 countries who are responsible for introduction of IFRS globally. The intention was to develop uniform accounting standards around the world so that the accounting is similar or on the same lines globally. So a committee was formed known as International Accounting Standards Committee, and they coined a word known as IAS, International Accounting Standard. And they started issuing standards in the name of IAS-1, IAS-2, IAS-3. So difference between IAS and IFRS is simply that the standards which are issued before year 2000, they are known as IAS, and the standards which were issued after 2000, they are known as IFRS. So International Accounting Standards Committee became International Accounting Standards Committee Foundation in year 2001, and they established a new body known as International Accounting Standards Board, which is known as ISB. Now IFRS Foundation is represented by 22 trustees, like 6 from Asia, Oceania, 6 from Europe, 6 from North America, 2 from Africa, and 2 from any other country which didn't get representation. So this is how it becomes international in nature. It is represented by 16 members who are nominated by national accountancy bodies who share their views, share their issues, and if majority of the people are in favor of issuing an accounting standard, the standard gets issued after consultation with working groups, with the policymakers, through exposure drafts, taking the view of academicians, taking the view from corporate professionals. The standard gets issued. So ISB is IFRS governing body. It was earlier known as IAC. It began their work from 1973 to 2000. Today it is in a supervisory role known as IFRS Foundation. So ISB replaced IAC in 2001. So there are 16 members. So till date there are 17 IFRSs, 24 ISs, 18 IFRICs or 7 SICs. IFRICs and SICs, IFRIC was earlier known as SIC. Now if a standard needed any clarification, there was a body known as Standards Interpretation Committee. Standards Interpretation Committee's role was SIC, Standards Interpretation Committee. It issued interpretations. After year 2001, it became IFRIC, International Financial Reporting Interpretation Committee. IFRIC, today it is known as IFRS Interpretation Committee. The interpretations issued before year 2000, before 2000 were known as SIC, and after 2000 they are known as IFRS. Suppose IS 11 was the standard for construction contracts. IS 18 was the standard on revenue. There was an interpretation issued in the name of IFRS 15, agreements for construction in real estate. To clarify which standard is applicable. So they clarified that if buyer has control over design and specification, IS 11 is applicable, and in all other circumstances it will be IS 18 considered sale of goods or rendering of services under IS 18 revenue. So interpretations are needed, like if the standard is not very clear, instead of issuing or replacing the standard, an interpretation is issued. Sometimes the standards are merged or withdrawn, like IS 11, IS 18, IFRS 15, IFRS 13, customer loyalty programs, SIC 31, barter transactions, IFRS 18, transfer of assets from customers. So comprehending revenue became very complex, and there was demand globally to come up with a new accounting standard on revenue. So all these standards, all these interpretations were withdrawn, and from 1st January 2018, a new standard, IFRS 15, revenue from contracts with customers, was introduced. On similar lines, IS 18 was replaced from 1st January 2019, and IFRS 16 leases got introduced. In future, from 1st January 2023, there will be new standard on IFRS 17 insurance contracts, which will replace IFRS 4 insurance contracts. Now, for the first time in the list, beginning from IFRS 1 to IFRS 16, the first time a standard will go missing with the introduction of IFRS 17. And they are working very closely with FASB. So IFRS 15 in India is known as Ind AS 115. In US it is known as ACCA 606. Leases in India is known as Ind AS 116. In US it is known as ASC 842. They are working in harmony very closely. Now revenue and leases standards are same globally today. So that's why I say that learning Ind AS or IFRS, you are becoming truly global or truly international accounting professional. So how it is monitored? IFRS Foundation structure. There is a monitoring board led by ISCO, European Commission, Japanese Financial Authority, Securities Exchange Commission. They monitor IFRS Foundation, which is the regulatory body for International Accounting Standards Board, IFRS Interpretation Committee, IFRS Advisory Council, which was earlier known as Standards Advisory Council, which is around 50 members, and working groups which are supporting the development of accounting standards. So the series of IAS was beginning with IAS 1, presentation of financial statements, IAS 2, inventories, IAS 3, 4, 5, 6, you do not see in the list because they are either withdrawn or merged with other standards. Hope you could make out how they are withdrawn and how they are merged. Now in future you will not see this list, IAS 11, IAS 18, IFRS 15, IFRS 13, SIC 31, IFRS 18. You will not see this in the list. They are withdrawn and merged with other standards and introduced a new standard like IFRS 15, 16, 17. So IAS 7 is statement of cash flows. The series begins or reaches till IAS 40 investment property, IAS 41 agriculture. Agriculture was the last standard issued by the previous body. Later, ISB was formed. They coined a new word, IFRS, International Financial Reporting Standards, and they started issuing standards in the name of IFRS. So the first standard issued by them was IFRS 1, first time adoption of IFRS. The need for this standard was, why this standard is needed? Now, in the absence of a standard on first time adoption, the standard applicable for changing accounting policies was IAS 8 accounting policies, changes in accounting estimates and errors. So if there is any change in accounting policy, it was applied retrospectively. If there's change in estimate, applied prospectively. Correction of prior period error, applied retrospectively. The retrospective application meant that as if we have been using the same accounting policy since beginning. Since beginning means whenever we introduce that item into a balance sheet for the first time, we'll be changing the accounting policy in a manner as if we've been using the same policy which we are going to introduce now since beginning, since incorporation, or since first time introducing that item into a balance sheet. Now imagine we are expecting this from all the countries globally. Do you think it will be possible for companies or countries to apply the effect retrospectively for each line item existing in the balance sheet? Is the reason no one was interested till first time adoption of IFRS was introduced. So IFRS 1, first time adoption of IFRS was actually a facility standard. First time adoption of IFRS, or in India it is known as first time adoption of Ind AS. IFRS 1 is India is known as Ind AS 101. This is actually a facility standard. I call it a facility standard because it gave us relaxation from applying the effect retrospectively. What was the relaxation given? There were mandatory exemptions, or there are mandatory exemptions and there are optional exemptions to apply the effect retrospectively. So it doesn't make our life complex, it makes our life easy. IFRS 1 or Ind AS 101 makes our life easy, that it opens up the door to implement IFRS and Ind AS for first time. This is used by an entity only once in their lifetime. Once they've used the facility available in this standard, this is no more applicable. In future, if they change any accounting policy, they have to apply IAS 8 or Ind AS 8. And they have to apply the effect retrospectively in future. This is only available for first time adoption. Is the reason it is known as first time adoption of IFRS or Ind AS. Only available for an entity who are moving to IFRS or Ind AS for the first time, because it has provisions for mandatory exemption, optional exemptions. If you noticed, change in accounting estimate is applied prospectively, that is in the current year and future year. So this is estimates are part of mandatory exemption from applying the effect retrospectively. They are mandatorily exempted because they are not even required to apply the effect retrospectively even in IAS 8. So is the reason they are mandatorily exempted in IFRS 1 or Ind AS 101. We apply the effect prospectively for them. Prospective application. Prospective means in the current year and in future years. That's the importance of IFRS 1 and first Ind AS 101 for first time adoption of IFRS and Ind AS. The requirement was how retrospective application was implemented. How retrospective application got implemented. For applying the effect retrospective, there is a requirement of one more balance sheet of the beginning of the earliest period presented. So in India, Ind AS was made mandatory for financial year beginning 1st April 2016. Now to be able to apply this change that it is mandatory from 1st April 2016, that means the first Ind AS complied balance sheet in India needs to be published of 31st March 2017. Now when we are implementing IFRS and Ind AS, the requirement of Ind AS one presentation of financial statements that we also need to give comparative of 31st March 2016 along with it. That should also be based on Ind AS. The income statements, the statement of changes in equity, the cash flows, all should be based on Ind AS. That means in reality, the comparative period begins from 1st April 2015 to 31st March 16. This is the period we are covering, which is also based on Ind AS. Though we are presenting the first balance sheet of Ind AS is being published in the year 2017, and along with that we are required to publish the comparative also based on Ind AS. Now what we have done to bring in the retrospective effect or applying the change retrospectively for the first time, we are required to present one more balance sheet of the beginning of the earliest period presented, which is this balance sheet, beginning of the earliest period presented. Now among the two, the earliest period is this period is beginning from 1st April 2016 to 31st March 17 because it is applicable from IFRS is mandatory from 1st April 2016. This is the current period. Beginning from 1st April 16 to 31st March 17 is the current period. The first balance sheet being published based on Ind AS is of 31st March 17. To make it comparable, the period covering from 1st April 2015 to 16 was also required to be presented on Ind AS, and 31st March 16 balance sheet is also based on Ind AS. So wherein will bring in the effect, that means the opening balance of 1st April 15 should have the new changes, the new accounting, the new principles, the new rules. So 31st March 2015 balance sheet, which is based on AS, which is also known as the previous GAAP balance sheet. This was picked up and converted to Ind AS, and the converted balance sheet or the opening balance sheet, in other words we call it the date of transition in India, the date of transition in India, or the converted balance sheet converted to Ind AS balance sheet, or the balance sheet in which we applied Ind AS 101. Ind AS 101 is applied to this balance sheet, first time adoption of Ind AS, and we got 1st April 2015 15 balance sheet which was based on Ind AS. Now we have the balances of Ind AS which became the opening balances with adjusted retained earnings which could be carried forward, and our 31st March 16 was automatically based on Ind AS, and we were successful in publishing the first Ind AS compliant balance sheet in India. What makes me eligible to share this, because this was the period when I was leading IFRS trainings on behalf of KPMG during the period 2014 to 16, and was delivering trainings on Ind AS wherever we implemented Ind AS, and was imparting it to chartered accountants professionals who were learning diploma in IFRS from us, from KPMG during this peak season of IFRS. So this experience was very enriching and gives a feeling of being associated with the transition in India, that we were the torch bearers who actually brought this change in India. So that's how we present 3 balance sheets whenever we apply the effect retrospectively. Even if you change any accounting policy in future, you need to present 3 balance sheets. Even if you correct a prior period error, you need to present 3 balance sheets. So in 3 instances, 3 balance sheets are presented: change in accounting policy, correction of a prior period error, and applying IFRS or Ind AS for first time. In these 3 circumstances, 3 balance sheets are presented because we apply the effect retrospectively. When we apply the effect retrospectively, we need to present 3 balance sheets. In the third case, applying the effect retrospectively, there are relaxations available. There are relaxations available in this because there is IFRS 1 or Ind AS 101 coming to rescue the first time adoption of IFRS and Ind AS by giving mandatory and optional exemptions. So this came in as a facility standard to facilitate the movement to IFRS or Ind AS. So it was introduced in phases. It was made mandatory for the financial year beginning 1st April 2016. There's different language being used. The date of transition in India is 1st April 15. But the first financial year to which it was made mandatory was beginning 1st April 2016. And the first Ind AS compliant balance sheet is of 31st March 17. Hope you understand the difference between these 3 sentences. They are same. The date of transition in India is 1st April 2015 because that's the date when we actually convert the previous GAAP balance sheet and we come up with converted balances on 1st April 2015. The first financial year to which Ind AS was applicable was beginning from 1st April 2016. If the financial year is beginning from 1st April 16 to which it is applicable, that means we need to cover income statement, statement of cash flows, changes in equity as per Ind AS. And the first Ind AS compliant balance sheet was published on 31st March 17 in India, which was mandatorily applicable in India in the phase 1. This is how we brought out the change. So as I talked about the interpretation committee, SICs were before 2000. Today they are known as IFRS Interpretation Committee. It was earlier Standards Interpretation Committee, which later became International Financial Reporting Interpretation Committee. IFRIC is the reason the terms used were IFRIC 1, IFRIC 2. Today it is known as IFRS Interpretation Committee. So I shared an example that why it is needed. If there is any doubt on understanding any accounting standard, an interpretation is issued to give clarification on it. Otherwise, we use it as per our own convenience. So what is IFRS? Is it IAS only? Is it IFRS only beginning from IFRS 1? Shall I study the international accounting standards beginning from IAS 1, IAS 2, or shall I ignore them? Do I need to study SICs or IFRICs? In India, SICs and IFRICs are included as part of appendices as part of the accounting standards. So when I say we are implementing IFRS, we are implementing IASs, IFRSs, SICs, IFRICs with equal prominence. All of them collectively are IFRSs of today globally. So we cannot say IFRS in the IFRS 1 to IFRS 16 isolation that these are the only standards applicable. We are implementing all the accounting standards as IFRS is of today. When did it actually begin? It was in 2005. Like when 2001 ISB was formed, they convinced countries, they convinced national accountancy heads or bodies to move to IFRS. So in 2005 was the major breakthrough when European Union made it mandatory to prepare consolidated financial statements based on IFRS. That's where the whole of Europe prepared their group level financial statements based on IFRS. In 2007, Australia, New Zealand, South Africa also moved to IFRS. In 2007, another major breakthrough was SEC allowing filing in IFRS, which helped a lot of European companies who were listed on US stock exchange to avoid converting their financial statements into US GAAP, which was a major breakthrough. In 2008, this was the time when I was studying IFRS as part of my curriculum in ACCA qualification. I had no idea that the accounting paper which I am studying as part of my curriculum will be something big in my life tomorrow. And this decision in 2008 became the reason for my career beginning in 2009 to deliver trainings on IFRS to chartered accountants, finance and accounting professionals. So this decision in 2008 in the G20 summit that India, Canada, Brazil, Argentina will be moving to IFRS from 2011 onwards. Though the date was postponed, but my career of training also got elongated and I kept on delivering trainings on IFRS from 2009 onwards and led the training teams in various corporates. We actually moved to IFRS in 2015 and that was a period of 14, 15, 16 I was part of KPMG. And till recently, I was Director Accounting Advisory Services BDO India, serving accounting advisory for mainly NBFCs because in 2018-19 it was the time for NBFCs, housing finance companies to move to IFRS. Was also heading Learning Solutions Pan India for imparting trainings on IFRS. So that's where the exposure on IFRS brings me in front of you to share with you insights on IFRS and Ind AS for your CA final examination, because which is same as diploma in IFRS of ACCA, which I've been delivering training since 10 years now. So the way I look at it is totally different because I look at it from a totally different angle, serving the corporates, having answered questions impromptu in a gathering of 80 to 100 people. It was like prompt consulting happening for me. So a rich experience gained in the last 10 years. So here's an opportunity to share all those insights with you through the Unacademy platform. So in 2011, we were supposed to move to IFRS, but actually we transitioned from 1st April 2015. What is the benefit of it? If any entity is planning to go on a stock, get listed on a stock exchange, since all the listed entities are required to prepare financial statements based on IFRS and Ind AS now. It gives access to foreign capital. It helps expanding businesses across borders. It makes the life of an accountant easier when they are consolidating the financial statements. It minimizes legal requirements and improves process and cost efficiencies across companies and across countries. It reduced accounting complexity. Now, accounting is similar, almost on the same lines globally, and also helped in mobilizing accounting and finance professionals globally. Now we can work anywhere globally. With the knowledge of IFRS and AS, you become eligible to cross borders and can decide the place of work. Wherever you wish to work, you can decide. And you are the lucky ones like who are learning Ind AS as part of your curriculum, because you do not have to study IFRS separately. The chartered accountants before 2018 or 17, they all had to study IFRS as part and had to appear for a separate paper based on diploma in IFRS, which was delivered by ACCA UK. You are the lucky ones who are studying it as part of your curriculum, and you do not need to study anything further beyond it, because this makes you truly global and truly international. This helped in improved comparability, and the quality of reporting also improved. So what is convergence? It means to achieve harmony with IFRSs. So to design and maintain national accounting standards in a way that the financial statements prepared in accordance with national accounting standards draw unreserved statement of compliance with IFRS. Though in India we are not adopting, so we'll be drawing an unreserved statement of compliance with Ind AS. So convergence means bringing in harmony. Adoption means adopting it word by word. So how it was done? Suppose it was supposed to be implemented in Singapore. They were given the option of naming it in their own prefix, so they named it SFRS. Australia and New Zealand named it ANZFRS. India, we named it Ind AS. And Bhutan named it BFRS. Similarly, all the countries are given this option. US was supposed to adopt to IFRS in 2014, but they have not given any date thereafter and have postponed it for an indefinite period. But at the back end, they're working very closely with ISB and developing standards, the new accounting standards like IFRS 9 financial instruments, IFRS 15 revenue, IFRS 16 leases, IFRS 17 insurance contracts are on the same lines in consultation with FASB. They are similar now. There is no difference between US GAAP and even IFRS for the new standards being developed. So slowly and steadily they are also moving towards IFRS, and a day will come when they'll also declare that we are also in harmony with IFRS, because that will become the need of the hour. That day is not far. So IAS 1 is Ind AS 1 in India, IAS 2 is Ind AS 2. The series goes till IAS 41. In India it is known as Ind AS 41. And after that we decided to term it as Ind AS 101. So IFRS 1 is Ind AS 101 in India, IFRS 2 is Ind AS 102. And till date we have issued IFRS 16 in India. But globally the standards issued are till IFRS 17 insurance contracts. In India we'll be issuing Ind AS 117 insurance contracts when it gets applicable globally. So the Ministry of Corporate Affairs, Government of India, in consultation with ICI, decided to converge and not to adopt IFRS as issued by ISB. So the ICI has formulated IFRS converged standards known as Indian Accounting Standards Ind AS, which have been notified by Ministry of Corporate Affairs under companies Indian Accounting Standard Rules 2015, wide notification dated February 16, 2015. They issued a notification on 16 February 2015 to make it mandatorily applicable from 1st April 2015. After recommendation of the National Advisory Committee, that is NACAS, today we have one more body, that is National Financial Reporting Authority. NFRA has also been established today to support accounting in India. So what was the roadmap for Ind AS implementation in India? It was introduced in phases. The voluntary application was from financial year. Now read it as financial year beginning 1st April 15. In India, voluntary application of Ind AS was allowed from 1st April 15. So anyone doing it voluntarily were publishing their Ind AS compliant balance sheet of 31st March 2016. But my focus will be on mandatory application, but that's when actually it got implemented in India. There was phase 1. 1st April 2016 is the date, or is the beginning of the financial year when we began implementation of Ind AS in India. And if you're beginning on 1st April 16 financial year, which is ending on 31st March 17, so we prepared first Ind AS compliant balance sheet of 31st March 17 in India. In phase 2, it was beginning financial year 1st April 17. So in phase 2, the balance sheet based on Ind AS was of 31st March 18. So when I talk about 1st April or thereafter, voluntary basis for all companies, this was voluntary. Mandatory was beginning financial year 1st April 16. So all the companies listed on stock exchange having a net worth of more than 500 crore, all the unlisted entities having a net worth of more than 500 crores, all in all we can say that any entity having a net worth of more than 500 crore was required to move to Ind AS in phase 1. Which not only got applicable to them, but if they have any subsidiaries, joint ventures, associates, it became applicable to them as well. Because for the purpose of consolidation, they were also required to move to Ind AS to facilitate preparation of consolidated financial statements. So 1st April 2016 financial year ending on 31st March 17 was the phase 1, in which all entities having a net worth of more than 500 crores came under the purview of Ind AS. In the second phase, it was applicable for all the entities which are listed on the stock exchange and unlisted entities having a net worth of more than 250 crore, because entities having a net worth of more than 500 crore were required to implement Ind AS in phase 1. So any entity having a net worth of more than 250 crore, and the listed entities, even if their net worth was lesser than 250 crore, all the listed entities came under the purview of IFRS or Ind AS beginning 1st April 2017. All unlisted entities having a net worth of more than 250 crore were also mandatorily required to implement Ind AS, and at the same time all their subsidiaries, associates, JVs also had to prepare financials based on Ind AS to facilitate preparation of consolidated financial statements. Because according to Ind AS 1110 consolidated financial statements, if there is an entity on the last day of the reporting date which we are controlling, we are required to present consolidated financial statements along with separate financial statements or individual financial statements. The banks, insurance companies, MBFCs, housing finance companies, non-banking financial companies, they were all required to get covered from the financial year beginning 2018-19 in a similar manner. Phase 1 and phase 2, all entities having net worth of more than 500 crores, banks, insurance companies, NBFCs, were required to implement Ind AS. Banks, insurance companies, NBFCs, housing finance companies, they were required to implement Ind AS beginning 1st April 2018. That means Ind AS balance sheet was supposed to be presented on 31st March 2019 for them. The comparative Ind AS of 31st March 2018 for them, and date of transition for them is Ind AS date of transition is 1st April 2017 is the date of transition for them, and the balance sheet which was converted was of 31st March 2017, which was based on AS. Apply Ind AS 101 on it, first time adoption of Ind AS. So in the phase 1, these were the dates. In phase 1, it was applicable from financial year beginning this date, beginning 1st April 2018. In phase 2, they were supposed to implement. The phases are applicable in the same manner, like all the entities worth over 500 crore, all the listed entities in the second phase, unlisted entities more than 250 crore. So this was applicable from 1st April 2019. So that means 2020 balance sheet was supposed to be based on Ind AS. In phase 2, the date of transition turns out to be 2018, which required conversion of the balance sheet of 31st March 18 and need to apply Ind AS. This was for banks, insurance companies, but banks, insurance companies had postponed it. NBFCs, housing finance companies, they all had to implement Ind AS. Banks and insurance companies postponed it, giving reasons that since IFRS 17 insurance contracts is around the corner, it was supposed to get implemented from 1st January 2021 earlier. Later the date is postponed to 1st January 2023. So they said that they do not wish to get into an compliance exercise now, and then again they had to move to a new accounting standard later. So they claimed exemption that they would like to implement it when IFRS 17 insurance contracts gets applicable globally. They would like to move on to the Ind AS then, though they are required to give a disclosure based on Ind AS as part of their existing financial statements. Banks have postponed it for an indefinite period as of now. RBI has postponed application of Ind AS for banks for an indefinite period. The reason I see is the application of expected credit loss model of Ind AS 109 financial instruments, which will require to project the defaults of future. It's moving on from incurred loss model to expected loss model, which will have a heavy impact on the banks because they'll be required to calculate the expected losses, expected credit losses for any advances they have given in terms of loans for lifetime expected credit loss and for 1 year losses. They need to record them as an expense immediately and create an allowance for the expected losses, which is a cumbersome task for banks, and they are not in a very good position, I think, as of today to implement Ind AS. So RBI is working towards bringing out the banks which are already running into losses, merging them with the profitable banks, so that we are able to sustain the banking system in India. I think that's one of the reasons which I see is the postponement of Ind AS for banks. The main reason behind it is the ECL model. Based on my experience and my consulting practice like till date, this is one of the reasons which we cannot comment it outrightly, but that's my guess or that's my thought, not mandatorily applicable to be ingrained by everyone, but I think this is one of the reasons which you can cite. So that's where ECL model becomes very important to understand it. So if anyone is willing to still look for an opportunity in Ind AS, you are the few lucky ones in India who are learning Ind AS as part of your curriculum. And when you enter the market, there will not be any difference between what you learned and what is actually being implemented in India. And by the time you reach the market, or you're already part of the market as part of your articleship, you must have seen the big change and also learning through it. And on the same lines, you're going to be tested. So this is the period like which is giving you practical exposure as well as allowing you to get yourself tested through the examination based on Ind AS as your CA final financial reporting paper. So this is the best time to learn Ind AS, and in future whosoever is becoming a chartered accountant, they will be truly global accounting finance professionals. So it's an opportunity, it's a blessing, and you still have opportunity to work on implementation projects in banks, insurance companies. They're yet to implement Ind AS in India. So if anyone is willing to be part of Ind AS implementation in these sectors, that is banking and insurance sector, they still have a huge opportunity opening a door for them for learning or brushing up your skills mainly on IFRS 9 or Ind AS. So the standards which you should be very well versed with is Ind AS 109 financial instruments, Ind AS 107 for financial instruments disclosures, Ind AS 32 financial instruments presentation, that is classification between equity and liability or classification of assets, and Ind AS 104 insurance contracts you can go through now, so that you'll get to know what changed. So this has a relationship with financial instruments, because the standard which will change in future will be Ind AS 117 insurance contracts. So you do not have to wait for India to publish insurance contracts and then only you'll be learning this standard. You can follow the guidelines issued by IFRS 17 insurance contracts and begin learning if you really wish to explore this opportunity which is around the corner. IFRS 17 insurance contracts. So one important thing which makes your life easier today is that you do not have to wait for the Ministry of Corporate Affairs to issue an accounting standard. There is guidelines issued by International Accounting Standards Board on the same standards. You can learn from them, and then if there are any changes, then you'll have to make minor adjustments into your learning, and you can be easily well versed in Ind AS. That's how we did it. We learned IFRS, and I could easily move to Ind AS because I had to eliminate some of the choices which were available in IFRS. So my life was easier comparatively because I was learning it as part of my curriculum. I delivered trainings on IFRS. So moving to Ind AS, the curriculum of CA Final Ind AS is more easier for me than any other group of students who are learning accounting anywhere. I find it the most easiest component as far as teaching is concerned, because I've been doing it day in and day out since 10 years now, and you can gain insights through my learnings on the Unacademy platform, and subscribe to my courses using the code ACCA Amit, and do share among your friends because they may not even know that Ind AS from a different perspective is being shared through my YouTube classes and special classes, and also through the courses on Unacademy, because the students are not aware of my presence, because I've been serving the corporates in the last 10 years. I started my career with Pyron Corporation delivering trainings on IFRS, later moved on to Is Consulting, wherein I worked with an IFRS project in Abu Dhabi, and later I started the first ACCA Institute at Delhi, offering diploma in IFRS and ACCA qualification. And on several calls from KPMG, I decided to join them in 2014. And this was the peak season of IFRS, wherein I got an opportunity to learn IFRS, deliver IFRS and Ind AS across the length and breadth of the country. For the next 3 years, was delivering trainings in Delhi as well as Mumbai, was delivering online trainings to people across the world. And in 17, I joined briefly for corporate accounting and taxation, and was knowledge management head for the updates for the contents at EMF. During that time, I also authored a book known as Ind AS Concepts in One Day to make the life of the CA final students easier, or accounting professionals who are willing to learn IFRS in India in the form of Ind AS, so that I can give them confidence that it is easy, it's not very complex. If you look at it from my perspective, your life can be easy. So I thought to share my insights in a summarized manner through a book known as Ind AS Concepts in One Day. Later on, I joined BDO as Director Accounting Advisory Services. Within a span of 8 years, beginning my career in 2009, in September 2017, I joined as Director Accounting Advisory Services BDO India, and was also Head Learning Solutions Pan India for delivering IFRS trainings, for supporting IFRS and Ind AS implementation guidance for NBFCs, and also supported some of the NBFCs for implementation on Ind AS. But that was a time for the financial year beginning 1st April 18, they were supposed to move to Ind AS. Currently, I am founder and CEO of Promisha Business School at Dehradun. I'm offering ACCA qualification for students after 10th, 12th, graduation, and supporting chartered accountants, finance and accounting professionals on the weekends, delivering trainings on diploma in IFRS, which I've been doing since 10 years now. So this is all about me. I wish your success. I wish Ind AS becomes part of your life in an easy manner, so that it not only helps you in India to serve the corporate, but I wish you to become truly global truly international in nature, so that you can provide your services globally. And we, being in India, can be the next service industry to the world through our accounting knowledge, because we have the resources, we have the talent pool, which simply needs exposure, and we can serve the world sitting here in India through our knowledge of Ind AS. So next time when you appear for any interview, and if they ask you, do you know Singapore gap, do you know Australian gap, do you know Canadian gap, do not say no. Simply say yes, I'm well versed with international accounting standards. I'm very well versed with international financial reporting standards. Having in-depth knowledge of Ind AS, I can serve any country, I can serve any gap globally today. Even if there is demand for revenue accounting manager or lease manager for ASC 606 or ASC 842 under US GAAP, you can confidently say that you are knowledgeable in those accounting areas as well, and can consider yourself truly global accounting professional. So this is a moment wherein you can really showcase your skills. Then there are many people I've noticed like who are not aware of this fact that learning Ind AS, they are global. So they say no, that they do not know the Singapore gap, or they do not know Hong Kong gap, they do not know Canadian gap, simply because they believe that they're learning in India, they're learning India as part of their ICA's curriculum. Please be aware that this is not just ICA's curriculum, this is the curriculum being learned globally now. Whether you are becoming a chartered accountant from Institute of Chartered Accountant in England and Wales, whether you are becoming a chartered accountant from CPA Australia, CPA Canada, or Hong Kong or Singapore, wherever you are learning, or in India, wherever you are learning financial reporting as part of your preparation of financial statements at advanced level, you are learning IFRS in a converged form known as Ind AS. So this is all for the day. Thanks for your time. Your success is our success. Let's crack it together. All the best wishes. Thank you.